Hello traders, welcome to a quick update for the beginning of this week, January 16th. Right now it's 1:17 a.m. Eastern Standard Time. We're just an hour and two away from the European market opens. So just give a quick update of what happened last Friday closing and what's about to happen for this week. So the Chinese balance, from last Friday, last Asian session was a missed number lower than expected from previous. U.S. core retail and PPI were both a miss, but the PPI and retail were both beat. So the big picture fundamental in the U.S. economy is still quite strong. So really the fundamental side of U.S. has not changed. But right now, as you can see, we have a lot of negative sentiment. Now, this week, of course, as you know, Friday, January 20th is the inauguration of Donald Trump. And that will be another risk event to look out for, because last time, as you can see, the press conference create a lot of negative sentiment for US dollar. And that's really the most biggest catalyst nowadays in 2017 is the political events and speakers' comments. It's actually going to be a larger effect than the fundamental data for 2017. So look out for the inauguration speech. Obviously, things like protectionism, trade war, those are all very negative for the US dollar. And things like infrastructures, higher boost for the economy, higher interest rate, lessen regulation for especially the financing industry. All those are very positive picture for US dollar. So watch out for whatever he's saying in his speech. That's going to really drive the biggest driver for US dollar. Another thing, so this is from actually last Friday, not really relevant for now. The WTI closed down with a small candle, still above 52. I'm gonna see what happened to the oil market. And notable news from OPEC, the delegate says that they will meet the target about 50 to 80%, not fully meet it. So it's expected already, because originally whenever OPEC has an agreement result, no one will expect them to meet that target 100%. So as long as they can reach 80%, that's quite positive. So of course, you can see from the Saudi report, they are already curbing their output. So really, it's looking quite positive for the oil market, and people, the oil producers, trying to push the price up to at least $60 to $65 per barrel. And I think they will be able to do it. However, it's not going to be a straight road upside. As I mentioned, the oil market is very volatile, so you do expect to see a lot of ups and downs according to the OPEC updates. So this is my analysis for Friday. So really, you can take a look at it. Not really relevant, because we actually have a new update for this weekend. The first thing is, of course, the British pound has a huge gap down. Now, on Tuesday, which is tomorrow, we are going to have Prime Minister May giving out the exact plan for Brexit. And now all the report and sentiment is in favor for a hard Brexit. So that's a very negative sentiment for British pound. And a lot of investors are already priced in to sell pound. Now, you have to remember, this is very, very common, where people are really buying or selling for the rumors. And whenever the actual result come out, doesn't matter what the result is, you will often see a huge reversal movement. So that's just something to keep in mind, that there's no certainty in this market. Right now you see a lot of selling into British pound. Don't be surprised that Tuesday, if she actually give a better, more positive comment, you will see a lot of buyback. Now, even on Tuesday, if she does give a very negative hard Brexit, you might still see a buyback, because as mentioned, the market is always trying to sell ahead or buy ahead of the actual fact. So That's what happened now. If you want to join this trend, it's definitely possible to see this continuous selling until Tuesday. Today, of course, is the Martin Luther King Day, so you expect a thin liquidity as the US traders are not going to be participated in today's market. So that's the update for Sunday, and that's the real biggest driver is a large gap down for British pound. I'm going to show you the chart later on that you will see it. And the rest of things are still holding, you know, and we'll just take a look at this week's risk event. So Sunday, the PPI data year to year from Japan. It can tell you what the inflation is. Now, since we already passed the Asian session, so let's take a look at the result. So the PPI is still negative. To look at that, that's way much better than the forecast and previous. So it's just saying that that does pick up a little bit for the inflation. And from last year's report, they did actually provide a better perspective for the outlook for the next interest rate meeting. Now, of course, they are not going to do anything for the next meeting. But knowing that things are becoming better for Japan, they might stop the, reduce the QE or, raise the interest rate a little bit. But it's not going to happen that soon. But just knowing that it's a positive PPI for Japan. The machinery order, of course, is still large, very negative. But basically, this is not really that relevant. This is relevant in the aggregated scale, but in terms of now, Japanese yen is really a highly sentimental mover, and it really goes with what happened to this week's risk event. So Japanese yen might be a large buying momentum for this week because of the two biggest events. First of all is the British pound. If we continue seeing pound dropping, and Tuesday, if Prime Minister May really give a very hard pre-exit talk, you will expect to see a large buy into a safe haven currency. On Friday, if we see another negative talk from Donald Trump, another selling into US dollar, we will see a large buy into Japanese yen. So that's Sunday's risk events. Now today, Monday, as mentioned, Martin Luther King Day, but you do have 1:30 p.m. Carney speaks. This is very important because I don't know the content, but he speaks before the Prime Minister May speaks. Now, he might really give a lot of confident talk. So really, I mean, if he's smart enough for central bank, it's either you set the stage for the tomorrow's speech, or you try to calm the market, because right now this gap down is definitely not good for the economy for Britain. So he might calm the market down, so you might see some buyback, or you might see a continuous selling. But that's the thing when you try to trade the sentiment, is that everything could be short-lived or it could be a very long effect. It's really depend on what happens. So really watch out for the news. So this speaks is important, especially in a way, just right before tomorrow's Tuesday's Prime Minister's May speech. So Tuesday, we do have a British pound CPI. This is actually not a tradable event for me. Now, the reason, first of all, is that you also have the speech coming out on the same day. So that completely diminish the importance of this data. Second thing is that the CPI is expected to be increased, but as mentioned, this increase is not positive. When you see a CPI increase, inflation can come from two different factors. It can be that the economy is doing better, you have a better resilient economy, or it can be also a sign that your currency is devaluated. Unfortunately, that is the case for Britain. Now, right now, the CPI has nothing to do with the economy. It's because the British pound has fallen greatly. So this CPI, whether it's an increase or decrease, really is not tradable, because either direction are not going to provide us any direction for the economy. It's really dependent on what happened to the pre-exit plan, which is the only events that is really tradable for Tuesday is that the Premier May speech. Now I don't know if there's a time. There's no timeline right. It's tentative, so we'll have to see on Tuesday. Just look at any news, Bloomberg, CNN, BBC, to see when is the talk is going to happen. We also have the GDP price. Sorry, not GDP. GDT price from New Zealand. Again, it's not a scheduled trade, but you have to watch out because we have few New Zealand dollar trade right now. So we do have to watch out and hopefully to break even prior to the GDT price. Again, last time it's quite negative, minus 3.9. So we are looking for something that's more positive, of course. If you have anything that's larger than 11%, that's very positive. You have anything lower than minus 3.9, that's very negative. So that's something to watch out for. On Wednesday, you have another data from British pound. Again, this is not really tradable for now because we have to see what happened to the speak. The Premier May speaks is everything because it's really gonna set the stage. So if the speaks is very negative, then all the data from British pound is irrelevant. No one will care about what's happened. The market will be really panicking. So it's not relevant and it's not tradable. So we'll have to see what happened Tuesday in order to decide what we're gonna do on this data. 8:30 Wednesday, you have the CPI and core CPI. Now this is tradable for US dollar, but of course the general picture is fundamentally it's very positive, but sentimentally we are still very uncertain because of the inauguration of Donald Trump. So again, and also you have to look at what happened to British pound, what happened to the general market. Everything is correlated, so it's hard to tell you whether you can trade or not. It's really dependent on this event. This is going to be a very important event for the global market. 10 o'clock, you do have the Bank of Canada monetary report policy rate. Now the rate is expected to be expect to be held. It's not, the rate is not going to be surprised. It's really depending on the press conference. Now he will tell you whether it's more upbeat, it's more positive or negative or neutral. Now we have to also watch out for what happened to the oil market, of course. But generally speaking, the bias is leaning more positive as the internal economy for Canada is quite positive and the oil market is looking quite positive as well. So that's what we're looking to trade. That's our bias basically. But we'll have to see what happened to the oil market. 3 o'clock, Yellen speaks. I don't know what's that about, but again, everything is quite excited for this week because so many political events. So watch out for this. Might be nothing, might be something. We have to watch out. 7:30, you have the employment data from Australia, and this is tradable because it might be a surprise. It might be a surprise negatively or positively. If the general risk for Tuesday is very negative, if you see the US dollar being continually selling, then of course you want to buy Australian dollar upon a positive surprise. If, however, after Tuesday and Wednesday you see a quite positive market, you see a US dollar being buyback, then you want to trade a negative data from Australian dollar. So we again have to tell you more about it on Tuesday and Wednesday. I will write down the number on this report later on, but in terms of how to trade it, it's really depend what happened to the global market. Thursday, you have an ECB meeting. It's going to give you a minimum. This is not expected to change the rate. However, the press conference will be important because this is going to be the first press conference of ECB in 2017. As mentioned, we do have different economies from different European countries, notably Germany, that urge ECB to raise interest rate ASAP. So ECB will really have to deal with different voices from different European countries. As mentioned, that's really the core problem of Eurozone, is that you have different countries with different economic background. So ECB has to really accommodate with everyone. Building permit, manufacturing index, unemployment claim are not really a tradable event, but it's important to watch out for. Again, it's not a big driver for US dollar, as Friday inauguration is the really core thing for US dollar. Crude oil inventory is also coming out on Thursday, and Yellen is going to speak again at 8 p.m. Finally, you have the Chinese data. This is important. The GDP data, industrial production, fixed asset investment. This is all very important. It's going to set a tone for the global economy. Right now, China is really a main player. If China has a positive data, generally speaking, the Asian equity market will go up. It's going to be a quite positive risk on sentiment all the way until London and New York session. Of course, that's going to help currencies like Australian dollar and New Zealand dollar. On the other hand, if you have a negative data coming out from China, that's going to be very negative for the global market. You see the equity market will most likely to go down from Asian session all the way to New York. Currencies such as Australian dollar and New Zealand dollar will all be effective, with Japanese yen and Swiss franc will be largely benefited. That's sort of the correlation for this data. Friday, of course, retail sale from British pound. Again, we don't know whether it's tradable or not. Really depend on what happened to Tuesday. And 8:30, you have a CPI and core retail. This also have to depend on what happened to the Bank of Canada's press conference and statement on Wednesday. So everything it's a quite excited week. You have a lot of political events and data release, but because it's all correlated, so we don't know which direction to trade. So we have to wait for each data or events to happen to unfold before we can decide the direction. So what I'm gonna do is to still write down the numbers, maximum number, minimum number. That's what you want to trade with, positive or negative. But whether I'm going to trade or not really have to depend on each event. So as for today, Monday, right now, the only thing is 1:30. Carney speaks. I don't even know if this is live or it's broadcast or anything like that. But might be tradable, might be not. We have to take a look at that. So let's take a look at our chart. So take a look at cable first. You see, you got a huge drop from low of 21.21 to it's almost 100 pips drops already. Now, of course, the flash crash on last year's October low is 1.15. That's the lowest low. It's still possible to reach that though. The thing is that normally when you have a gap, if there's no significant events, the gap will be closed. But as for now, you already passed the Asian session. We don't know whether this gap is going to be closing or not. Most likely, if it's closed, it's just a technical aspect. But in terms of the sentiment, it's really looking to go downside. If you're looking at the futures market, pound is really being short right now. There's lots of short position into British pound as well. So that's really the general picture for British pound. Let's take a look at 20-year currencies, and we'll see really what's the sentiment right now. Actually, let's not look at daily chart because it's quite meaningless to look at daily chart as Sunday. Let's take a look at hourly, and then we'll know what happened. So Euro pound, look at that huge gap up. And right now you are still right here. Other than that, Euro Swiss, all these things are not. Euro dollar, all other than pound, really nothing worthwhile to take a look at right now. So look at cable, huge drop as mentioned from last Friday. You close that here, now you're dropping here. So it might keep going lower. What I'm gonna do is I'm actually looking to short it, of course, but not at this level. What you want to do is it's looking out for the beginning of the sentiment. So this is the beginning of this surge, this going uptrend is from Donald Trump's press conference. So it goes up, and then this is where this red candle is where Theresa May gave out that heartbreak gave out a report that she's going to give a pre-exit talk on Tuesday. And of course, market reacted to it very negatively, so a huge selling. So what you can do is draw a Fibonacci line from here all the way till today's low. And as you can see, 50% is right at this resistance zone. So 61% to 50% is really right at here. So take a look at if we have the price going back here, which is also close down the gap. So that's where I might look out for a selling signal if it's happened there. So if we have that, I'm looking to sell at 2150 as a wrong number, or 2200 as a wrong number. So this is the zone I'm looking to sell if we have a signal. So this is more like a sentiment trade, not going with the current situation. You can also pick something like Pound Aussie. We are still in our Pound Newsy trade, of course, but Australian dollar is the strongest currency right now. So you could choose that. Again, from here, you can draw a Fibonacci line to see if it just reached this area. That's what you could do to short it. So if we can really come up to 62.20, 61.76, really this zone between 62.65 to 61.76, ideally at 50%, that's where you can look out to sell it. You can either just, well, depending on how you want to trade it, but for me, regardless, that's the zone I'm looking out for. And the reason to entry, of course, is the sentimental reason that we have a large panicking seller right now because of the speech that's about to given on Tuesday. Now, watch out for Carney speaks. It might be very positive. Try to counter market, which will actually see a large reversal movement. So that's pretty much the update. If you want to look at other thing like Pound CAD, pretty much all the British pound currency is reacting the same way. So you can pick either one currency to sell it when it goes up, but it might not go up. It might just keep dropping. We never know. So that's pretty much the things I'm looking out for. Is that you sentimentally you can sell British pound upon the reversal. That's a quite nice plan to do it. You can do Pound CAD as well because Canadian dollar is quite strong recently, as mentioned. So you could do that as well. You could just pick a high here, low here, wait for it to reach 59.75 at this area. Again, you can try to draw a Fibonacci line from here all the way down here, and you'll see the 50%. Again, it's like 59.50. So yeah, that's really the area we are looking to sell. So we don't know if we will reach here, but we will see what happens. So that's pretty much it. That's the only thing, the only risk events that's happening right now that's worthwhile to talk about. Other than that, this week, just to recap, you have tomorrow, Bank of England Carney will speak. Tuesday, the biggest event with Theresa May will give a speech about Brexit. The general sentiment is negative for British pound, but we might see a large reversal if the talk is not that negative. You might actually see a reversal. If you see a reversal, of course, what you want to buy is pound yen. So if you do see a reversal, pound yen will most likely be the largest selling one because yen, again, the safe haven currency. So if you do see a reversal on Tuesday, because the thing, if it's not a negative, you can actually buy pound yen buyback. Wednesday, you do have another British pound data, but we don't know whether it's tradable or not, depending on what happened Wednesday. Depending on what happened on Tuesday's speech. Thursday ECB meeting. That's also watch out for euro and crude oil inventory. Chinese data is so important. Friday you have Canadian core CPI and CPI retail and core retail. And of course, Friday is the inauguration of Donald Trump. That's really what you want to watch out for. So that's pretty much it. I'll be back on another the analysis after the New York session. So this just right now I'm just watching out to see either any pound pair can come back to reach the gap 50% area, and if I have either a candlestick signal or things like that, I'm very interested to sell it. I might choose pound Aussie, pound CAD. I'm already in pound Newsy, so I don't want to do pound Newsy again. I might do pound Aussie, pound CAD, or cable. Those are the one I'm looking. Maybe not cable because US dollar is quite negative as well. So pound yen also will but not be bad either. Let me see what's the level for pound yen. Oh, sorry, it's not. So if I want to do pound yen, as you can see, we keep dropping lower. We're not. So if you keep dropping lower without retracement, you do have to adjust a little bit. But pound yen is the largest dropping one. From here to here is already like 300 pips. So we'll see what happened if it does goes up to touch 138.70 and things like that. But if you want to trade it, be careful for Carney's speaks, because that might change the momentum of British pound. So that's the only thing I'm looking at right now. Other than that, I will have to wait for a New York session close to see what happened on Monday. So other than, again, it's the thin liquidity because the Martin Luther King's Day. So trade safely. I'll be back after the New York session. Thanks for watching. I'll see you guys there. Thank you. Bye bye.